there are so many different ways that you can use real estate to become financially free, and we're both on that journey at the moment. For us, it's more of that longer term, lower risk approach, and in today's video, we're going to break down 2 strategies that both of us are personally using to hopefully become financially free.
Now, it's taken me a long time to find my feet as an investor. You know, I've read a lot of books, Australian, American. I've gone to the seminars, I've gone to the events, I've done the online training, the webinars, I've listened to the podcasts, the videos. You've done all the same stuff,
yeah,
man.
Dude.
And, you know, personally, I've tried buying and holding granny flats, renovating, subdivision, Airbnb, knocking down and rebuilding houses, building houses, small blocks, big blocks, like regional, metro, Sydney, Brisbane, Sunny Coast, Cuyahoga, which was the worst mistake I ever made in my life.
There's so many ways, right? Like
so many ways.
But you need to pick your lane, and our approach to real estate investing is super simple. Now, we really just believe that smart investors target the major metro markets like your Sydneys, Melbourne, Brisbane's, all the major regional markets supporting the big cities. And not only are smart investors focusing on the areas with the most population growth, job growth, and infrastructure growth, they're also buying quality houses, quality suburbs on big blocks of land in really good areas, either closer to the city or closer to the beaches. Like, it doesn't need to be much more difficult than that.
I love that, bro. Like, at the start, it feels like a lot, but once you simplify down to what works for you, for your family, for your risk profile, and most importantly, what's going to give you choices sooner in your life, you know, it can become super simple. So from there, there's 2 very, very different ideas that Simon and I both have about short and long-term real estate. Now, the most important thing I believe that every investor should do if you're interested in a low-risk, safe, long-term strategy is set up the foundation of properties that are going to make you financially free in the future.
Yeah.
Now, that's as simple as maybe buying 3 really high-quality houses slowly over a period of a couple of years or 10 years, depending on your financial position. And then, you know, let's say that theoretically each of those houses cost you $500K each. So you spent 1.5 million total, and each of them are renting for $500 a week. Now, if we hold those properties for 15 years, let's say you owned all 3 of them today, that $1.5 million in 15 years with a 4.8% return is going to be almost $3 million a year, or $3 million worth of property. And then on top of that, if your $1,500 a week of rent today is held for 15 years with a small increase of 2.5% a year, we're going to be well over the $2,000 a week mark, or the $100K per year of income. Now, the only thing stopping you doing that is it's tough.
Oh yeah, 3 properties
saving,
is a lot.
Scary, all of that stuff. I fully get it. And then obviously once you've got them, slowly working off that debt, which is, I suppose, the hardest part of it all.
For sure, but I think you talk to any investor like that's a little bit older, that's, you know, been in the industry or been an investor for decades, you know, they always just say hold real estate for the longer term, hold it forever. When you buy it, intend to never sell the property. And that's what we love about this strategy. You know, you get a good asset base, you get a good rental return, and we're not talking about going and buying a $500K in any market. As I said, we're still focusing on all of the fundamentals, which we've done heaps of videos in the past. You can go check them out on how to identify a market or a suburb to make sure that you're getting the most out of these properties. But hoping to never have to sell the properties is exactly what I'm going to do.
And it takes so much pressure off. Like, it means that you can take your time because you're going to hold it for 30 years and you can find the right stuff, like big blocks, quiet streets, quality suburbs, low percentages of renters, high average incomes, very low vacancy rates. You can also look at all of Australia and you can time, if Sydney and Melbourne haven't performed for 10 years, then have a look at them. But if Brisbane or Adelaide or Perth haven't performed, then you can start to look at those as the stepping stone into the market based on your entry price.
Yeah, and then, you know, with those foundations, like, that's what you need to start with, right? You need to start with your foundations, building that longer term portfolio that's going to allow you to achieve that passive income goal that you're working towards. But then from that, you can transition into the other strategy that we like to use, which is a bit more of a shorter term one. Now, The reason that we don't like to start with the shorter term deals is because humans are inherently greedy, and you're just going to continue pushing the envelope a little bit further. And without the appropriate skills, without the appropriate team and asset base, it can be really risky and really difficult to actually generate some short-term returns. And, if you start with the longer-term properties, you're going to learn how to time markets properly. You're going to learn how to buy real estate well. You're going to build your team. And, it's so important. It's like when you leave school, you go to university and you build the foundations in university to then go and get your career. Or if you go to a trade, you do your apprenticeship first to build the foundations to then go become a tradesperson. Like, real estate isn't any different. You should start with the basics, start with the fundamentals, the foundations, and then leverage off that in the future to look at trickier strategies.
I love that, man. Like, it is such a learned skill set, and it's so learnable and teachable, this stuff. And so let's say that right now you've got your 3 properties set up, you've got your $1,500 a week of income today, which will be $2,000. You've got your $1.5 million property portfolio that'll be worth $3. Then it's like, well, how do I pay this off faster is really the reason why Simon and I went from just thinking long-term to short-term. And I went, well, there's heaps of different ways to do it. You can earn more money, you can work harder, you can have your partner earn more money or work harder, you can start a little side hustle. But I went, well, what do I know? I know real estate. I've got my long-term properties, my 3 or 4 set up. And now it's a case of, well, how can I use the leverage of property? Because that's why I love it as a short-term strategy. I can put down 20 cents and borrow $1. So it's like I can go buy a $600K property by putting down $120,000. And that is exciting for me because let's say I've got that 120K and I put in the stock market. If I get a 7% return per year on that 120, that's okay. But if I get a 7% return for the next 5 or 6 years off a $600,000 asset, I'm going to be in a much stronger financial position because of the leverage. So my short-term strategy looks so simple. Completely buy the bottom of a market. So that means Sydney, if it hasn't performed well, or Brisbane or Newcastle or Geelong, looking for that marketplace that's got a really strong long-term history of growth that still ticks your fundamental boxes but hasn't performed. And then go and buy it at a time when not everybody's looking at it, like a Brisbane or a Perth or an Adelaide now, and hold that property for as long as it takes until you've done a significant amount of medium-term growth, and then work with your accountant or financial advisor around a plan for selling that off, using whatever money you get after the tax to wipe off debt on your foundational property faster. And I think that's what I'm personally doing at the moment, starting to set up those properties that I'll sell in 5 or 6 years that I can use to wipe off debt much faster and massively improve my position without having to work so hard for the next 30 years.
Yeah, and what I'm personally doing, I'm going to use my home as that sort of asset because I can then get some good tax benefits from doing that. And it's just going to enable me to fast track that journey to financial freedom as well, pay off some debt, get myself into a safe position, preparing for that next part of the cycle. So like timing can really, really play a big role in your investment journey, especially when it comes to these shorter term ones. So, that's probably the trickiest part about investing is actually understanding when to buy and when to sell.
Yeah, and there's so much good information out on that. I completely agree, man. It was the thing that took me the longest to learn and the longest to properly understand. But we like Phil Anderson, we like Ray Dalio, we like Fred Harrison. All of those guys have some incredible stuff around timing. If you want to simplify it even further, check out what CoreLogic or Heron Todd White or, the guys at the Urban Developer are saying about different markets. Like, you put something up that I hadn't even seen this week on our Instagram, which was a quote from Westpac saying that they expect Brisbane house prices to go up by 20% in 2022 and 2023. And Commonwealth Bank's also expecting it to go up by another 10% in 2021. It's like, that's almost a 30% gain according to these guys that spend tens of millions of dollars a year on, choking through that, on analysis. And it's like, wow, like that's exciting. What are the same people saying about Sydney or what are they saying about Perth? And then also looking back at the longer term history and going, well, Sydney, Melbourne are already up 6 to 7, maybe 8% per year over the last 10 years. Parts of Brisbane and Perth are up 1.5%. You look at what the guys from DSR are saying, like Jeremy Shepherd,
yep.
about markets that have done really well in the first 10 years of a 20-year cycle. Maybe they don't do as well in the second.
Yep.
Markets that have done really poorly in the first 10 years of 20 years generally do better in the next. And it makes sense. Like, if people are earning the same money in Brizzy or Perth as they are in Sydney and Melbourne, but the house prices are a third or half the price, there's affordability there.
It's just taking away your biases and taking away your emotion and starting to look at smarter people and looking at the historic data to try and make those more educated decisions. But I also think it's really picking your lane as well. And that's what we want you guys to get out of this. Like, we've chosen long-term real estate to pay off debt, to live off the rental income from those properties. And then we've chosen the same asset, just using it as a bit more of a shorter term play to pay off the debt to hopefully realize that passive income a bit sooner.
Now, the problem with the short-term strategy, full disclaimer and disclosure, is we never know what's going to happen in 5 years. So I'm buying and hoping that Westpac's analysis is right, but I've got no idea. And so that's why, as Simon said, you set up your long-term first, because that is the safety, that is the security, that's the cash flow, that's the wealth for your family and future generations. It's just, once you understand things, it's like anything, you can start to apply things and tweak things a little bit better to get better quality outcomes in a shorter period of time. And you can partner those strategies to really get yourself ahead in a 15-year period. Yeah,
so, we're actually full service buyers agents that just help a really small number of people enter into the Southeast Queensland real estate market every single month. So if you're in a position where you're, starting to look at trying to figure out where you're going to buy, maybe you're already in a position, you've already been talking to a mortgage broker and you're basically ready to pull the trigger, if you're struggling to figure out what type of strategy you should implement or what type of market you should be focusing on, then we actually offer free strategy sessions to the people that are in a position to buy. And during that, we can actually talk about exactly where you're at right now, where you're looking to be in the future, and we can start to help you understand a little bit more about the Australian property market, maybe help you understand some different strategies that might make it a little bit easier for you to achieve your goals. And then, if all things align, then, potentially end up working together as well.
And if not, you can take that information that we've provided on the Brizzy market or the Sunny Coast market, and you can go and implement that yourself and smash it. And that's really what we want for you guys. We just want you to make the best investment decisions possible, because we're not trying to build a 200 property portfolio. We're just trying to create a small number of great assets that enable us to sleep at night in quality markets that will enable us to achieve our short, medium and long-term financial goals. And if you're in alignment with that and you're looking for those choices in your life, we really wish you all the best, and we hope to hear from you guys soon.
Thanks so much for watching.
Sweaty. So sweaty. Oh, that's good.